Morning, everyone. It's my pleasure to be here again with you in our lovely module, Intermediate Management Accounting. So, today we have a very interesting topic, which is explaining how the marginal costing differs from absorption costing. So, as you know, as a management accountant, we have different methods and approaches to evaluate the inventory, to evaluate the cost of the product. So, one of them is a marginal costing, or we could call it variable costing, and another one is the absorption costing. So, we will learn how to compute the unit product cost under each method and also prepare income statement under each approach. Before we start, so and treats the non-manufacturing as a period cost. Let's go into more details. So absorption costing here, if you look at the right side, absorption costing divides the product cost to direct material, direct labor, variable and fixed manufacturing overhead. So it absorbs. That's why we call it absorption costing or full costing. It absorbs all the manufacturing costs to the product. It traces all the manufacturing costs to the product. However, any selling and administrative expenses will be considered as a period cost. The question is when we use absorption costing or full costing. When you do financial reporting, financial statements for external purpose, you must follow the GAAP. You must follow the accounting standards, international accounting standards, which requires that the accountant use absorption costing because, we assume it's more accurate, more realistic because it absorbs all the manufacturing cost to the product. Okay? However, if we go to the marginal cost traces all variable costs to the product and treats fixed manufacturing overhead and non-manufacturing overhead as a period cost. So here we consider only the variable manufacturing cost to be the product cost. Let's go into more details. So if you look at the left side of the screen, we're going to see marginal costing. Consider the product cost would be direct material, direct labor, and variable manufacturing overhead. So it only concerns about the variable cost of the product. Why we use the marginal costing? Usually, management accountants use the variable costing for, make short-term decisions such as make or buy, which we're gonna discuss next lecture. So we usually care about in this short-term decision, we care about the contribution margin of the product. If I increase my production by 1 unit, how much is the contribution margin? How much it gonna add value to my profit? In marginal costing as well, the fixed manufacturing overhead and selling and administrative would be considered as a period cost. So let's go for a practical example before this one. Let me open my screen. So we have here Apple selling the new iPhone, which I really like, the purple color, okay? And the selling price per unit would be £1,000, okay? Direct material for the product, let's assume 100, direct labor 50, variable overhead would be 70, and also we have a fixed overhead which is given in total 10,000, and the Manchester branch is producing, here the production level would be 1,000 units, okay? And also we have a variable selling and administrative, which is £20. We have fixed selling and administrative given in total as well, equal to 15,000. And units sold is 1,500 units for Manchester branch. Okay, so the question is, calculate the unit or the product cost or the unit cost for the product under both methods. So for absorption, very simple. Unit cost would be direct material, £100, direct labor, £50, and all manufacturing costs, direct material, direct labor, variable overhead, which is 70, and also we have the fixed manufacturing overhead per unit. If you divide the 10,000 over 1,000, it's going to be £10 for this item. So under absorption, the unit product cost would be, in this case, let me calculate. So here 120 would be a 230, if I'm not wrong in my calculation. Okay, so if you go to the marginal approach traces only the variable cost to the product. So direct material for sure, £100, direct labor £50, and also we have the variable overhead, which is £70. Okay, fixed overhead is not traced under the marginal approach. So here the total would be 220. If you look at the difference is simply the fixed overhead in this case. So that's the difference between the two approach. We're also gonna learn how to prepare income statement, but I'm gonna give you some time. So we're gonna be divided into two groups. Group A and Group B. We have a case here of a production company, and we need to calculate we need to calculate under absorption and under marginal costing the unit cost. So you have 5 minutes to solve the case. Group A work together, Group B work together. Amazing. Perfect. So let's see the model answer here. So as you know, absorption costing is different than variable costing because it traces also the fixed manufacturing overhead. So here, direct material, direct labor, variable MOH, and fixed MOH would be traced under the absorption costing. So the unit product cost would be 16, but under the variable costing, it would be $10 in this case, and the difference would be very clearly it's the fixed manufacturing overhead. Perfect. Let's continue our example and prepare income statement under both approaches, absorption and variable or marginal costing. If you know that there is a 20,000 units sold and selling price is 30 for each unit, there is no beginning inventory. So let's compute the net operating income under both approaches. Perfect, thank you. So Group A have got the correct answer. Perfect, thank you. Group B have some, let's discuss it together. So income statement, as you know, income statement very, very simple. You take the sales minus the cost and you get the profit. But let's go into more and more details here. Under marginal costing, we're gonna prepare something called a contribution format income statement. So as you say, the sales would be the number of units sold multiplied by the selling price, which all of you got correctly, but we're gonna deduct only the variable expenses. Why? Because we need something called a contribution margin. So the contribution margin here in this case would be sales minus variable cost of goods sold, and variable selling and administrative expenses. Then we got a contribution margin which is 340. Okay, if you deduct the fixed expenses, whatever it's fixed manufacturing overhead or fixed selling and administrative, you will reach a net operating profit which is 90,000. Okay, if we compare with the absorption costing, here are the sales. Same approach, number of units sold multiplied by the selling price, we will deduct the cost of goods sold. But keep in mind, under absorption costing, the unit cost is direct material, direct labor, and manufacturing overhead, including variable and fixed manufacturing overhead. Really important. That's why we call it absorption, because it absorbs the full cost of the product. Okay? We will reach to a profit called a gross margin. And gross margin, if we deduct the selling and administrative expenses, we will find a net operating income which is 120,000. It's totally different than the 90,000 from the marginal costing. If you look at the difference between the two approaches, here we have 90,000 and here we have 120,000. So the difference would be a 30,000 difference between the two approaches. And if we do a reconciliation, which we're going to discuss later, reconciliation say the difference between the two approaches would be the fixed manufacturing overhead, which is deferred in inventory. Okay, because this example say there is no beginning inventory in this factory or this case. Okay, perfect, thank you. So today we have learned the difference between marginal costing and absorption costing. We have learned how to compute unit product cost under both approach, how to prepare income statement. Any questions? Perfect, thank you. Next lecture, I'm so excited that we're gonna discuss the make or buy decisions and what we have learned today under absorption and marginal costing. We're gonna use it in make or buy decision. So excited. Please drop me an email anytime you feel you wanna ask about anything, or come to visit me in my office. You are mostly welcome. Thank you. Bye.